Welcome back to the Malaysian Money Matters Show. It's the 3rd of July, 2025.
Good to be here.
Our mission today, as always, is to really dig into the latest financial and economic headlines. We want to pull out the key insights for you, our listener.
Absolutely. Lots happening both here at home and globally as well. Ready to jump in.
Let's do it. Starting with Malaysian company news. First up, market performance and new listings. ASM Automation Group had its debut on the ACE market.
Right.
And it ended its first day down 3% from the 17-cent IPO price, which is interesting because the public portion was oversubscribed.
Yeah, that is interesting. It suggests maybe some investor caution around new listings right now, perhaps looking for quicker wins rather than, the long-term story.
Even though ASM has big plans.
Yeah.
That RM 11.4 million for a new factory.
Exactly. They're signaling confidence in their future growth. But that day one dip, it probably reflects a bit of broader market nerves, despite the oversubscription.
Okay. And sticking with listings, Plytec Holding has formally applied to move up to the main market.
Yes, that's a positive signal. It means they've met the profit requirements, which aren't easy. So it points to, solid financial health. Good growth.
A sign of maturity for the company.
Definitely.
All right, moving on to key contracts and sectors seeing growth. Wawasan Dengkil Holdings picked up contracts worth RM 53.81 million.
For fiber optic infrastructure and earthworks.
What's the significance there?
Well, obviously good for their bottom line,
Yeah.
but it also highlights this ongoing national focus on building out critical infrastructure, both digital and physical. These projects are pretty fundamental.
Right, foundational stuff. Now, in the tech space, key Asic, they bagged a RM 13.1 million contract for AI chip design.
Yeah, and that's not just any contract. This is about positioning Malaysia in that high-value part of the AI and the design phase. Promises long-term recurring revenue, too.
So moving beyond just using AI into actually creating the tech.
Exactly. It shows our capabilities growing there. And speaking of tech infrastructure, Powerwall Holdings also secured orders, RM 16.63 million for switchboards.
For a hyperscale data center in Selangor, I see.
Correct. Points to really strong demand in that digital infrastructure space. It's booming.
And speaking of data centers, Alibaba Group launched its third one here. Part of that massive global U.S. $53 billion AI infrastructure investment plan.
Yeah, that's a huge vote of confidence. It really cements Malaysia's role as a key regional data hub, attracting that foreign investment and, driving the digital economy forward, especially in AI.
Okay, let's shift gears to policy and operational impacts. Tenaga Nasional, the federal court, ruled its power business is a utility, not manufacturing.
Right. And that upheld a RM 1.25 billion tax assessment.
That sounds like a significant hit.
It is. But the implications go wider than just TNB's tax bill. It sets a precedent, potentially changing how all utility companies are treated for tax incentives, could reshape investment models.
Interesting. Also on the policy front, the government made a big move with the green electricity tariff, slashing the price by 80%.
Yeah, quite dramatic. New flat rates down as low as 3 cents per kilowatt hour.
What's the goal there?
Make green energy much, much more attractive financially. It helps with sustainability goals, sure, but it's also a strategic move to lure in energy-hungry businesses, like those data centers we just talked about. Boosts our competitiveness for companies focused on ESG.
Got it. And some good news for businesses in the Klang Valley Gas Malaysia is back to full supply.
Yes, after that 92-day pipeline disruption, that restores much-needed stability for their industrial and commercial customers. Operationally crucial.
Any major financial hit to Gas Malaysia itself?
Apparently expected to be minor. Shows some resilience there in managing the disruption.
All right, let's look at corporate strategy. Kerjaya Prospect Group has been busy. Acquired land in KL for RM 112.8 million and a joint venture for a mixed-use development in Penang.
That looks like a clear strategic expansion of their property development footprint. They're betting on growth in key urban areas, not just sticking to construction.
Okay. And for my news holdings, analysts are expecting a recovery after Raya.
Yeah, the outlook seems better, driven by hopes of increased consumer demand and their plan to open 100 new stores.
But potential headwinds too.
Definitely. Cost pressures are a concern. Things like the new sales and service tax and leasing, plus mandatory EPF for foreign workers, those could bite into margins even as sales recover.
Right. Now, the banking sector, bit of a debate here. Cananga Research thinks banking stocks are oversold.
They do. They point to resilient fundamentals. But other houses like CIMB are actually expecting Bank Negara to cut the overnight policy rate, maybe by 25 basis points, even this month, to stimulate growth.
Oh, a real difference of opinion there.
Exactly. It highlights this key tension. Are the banks fundamentally strong enough, or does the broader economy still need that monetary policy nudge? It's a central question right now.
We also saw some leadership shifts. CEOs resigned at MSM Malaysia Holdings and UEM Magenta.
Syed Faisal at MSM and Sairunizam Samsudin at UEM Magenta happened amidst somewhat mixed financial results for both companies in their latest quarters.
Okay. And finally, on the Malaysian front, commodities. BMI is holding its 2025 crude palm oil price forecast steady.
Yeah, at RM 4,150 per ton. This suggests they see continued price pressure, likely because Malaysian production is expected to improve, more supply keeping prices in check, basically.
Got it. Let's broaden the view now to international and political news. U.S. President Trump's tariff threats seem to be escalating.
They are, specifically mentioning up to 35% on Japan. It's creating, well, quite a bit of volatility for Asian stocks. There's a July 9 deadline looming for some trade deals.
The impact.
Uncertainty. Massive uncertainty for export-driven economies across Asia. Investors are getting nervous. Companies might have to rethink supply chains. It's economic fallout from political moves.
Interestingly, BlackRock is seeing clients shift away from U.S. assets.
Yeah, diversifying towards Asian and European equities and away from the U.S. dollar, too.
What does that signal?
It's potentially a significant shift in global capital flows. Investors might be looking for better opportunities elsewhere, or perhaps hedging against U.S.-centric risks. Or rebalancing, maybe.
And Fed Chair Jerome Powell made a direct link between tariffs and interest rates.
He did. Explicitly said the Fed is on hold with rate cuts because of how tariffs are impacting inflation forecasts.
So trade policy is directly influencing monetary policy now.
Absolutely. They're deeply intertwined. Tariffs aren't just about trade anymore. They're shaping central bank thinking globally.
Meanwhile, China's leadership is focused inward, vowing to curb aggressive price wars and build up their domestic market.
Yes, trying to boost internal demand and fight deflationary pressures. It's a strategic shift. Reducing reliance on exports could have big long-term effects on global trade patterns.
Over in Europe, the EU is proposing a 90% emissions cut by 2040.
Ambitious goal. But they included flexibilities, like using international carbon offsets,
Which
signals the political and economic challenges. Achieving that target will involve some complex negotiations and trade-offs among member states. It's not straightforward.
Back in the U.S., the Senate passed that multi-trillion-dollar tax bill from Trump.
Right. Permanent business tax breaks, credits for chip manufacturing. It's very much a pro-business fiscal policy, aiming to boost investment, especially in strategic sectors like chips.
We'll have to see the long-term economic effect.
Uber.
And one more indicator from the U.S., Barclays' irrational exuberance gauge hit a high level.
Yeah, 10.7%. Levels seen back in previous market froth periods, like the dot-com bubble.
A warning sign.
Potentially. It suggests market valuations might be running ahead of fundamentals. Could mean increased volatility ahead. A bit of a red flag for investors to watch.
Finally, currency intervention. The Hong Kong Monetary Authority stepped in again.
Buying HK $20.02 billion to defend the currency peg against the U.S. dollar.
Still facing pressure, then.
Clearly. It shows the ongoing volatility surrounding the Hong Kong dollar and the HKMA's firm commitment to maintaining that peg, whatever the cost. Persistent pressure there.
Wow, okay. That's a lot to digest, from local company moves to global policy shifts.
It really is a very interconnected picture.
So, thinking about our listeners, what does all this actually mean for you?
That's the key question, isn't it? Maybe the thought to leave you with is this. How will these intertwined global forces, like tariffs and shifting capital, and these local developments like infrastructure spending and policy changes, really shape Malaysia's economic path in the coming months? And what does that prompt you to ask about your own financial outlook?
Plenty to think about there. To keep exploring these questions with us, please subscribe to the Malaysia Money Matters podcast. We'll be back soon with another deep dive. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.